Is the altcoin season finally here? Top analysts are screaming yes, pointing to Ethereum's big moves while Bitcoin looks a bit shaky. Jerome Powell's latest speech sent markets soaring, with ETH and Solana hitting crazy new highs. While some traders are setting buy orders for a potential Bitcoin drop to around $110,000, others are looking at a new valuation model called Total Value Secured that suggests Ethereum's true worth is way higher than anyone thinks. But there's a warning you can't ignore. Big companies are rushing to create their own stablecoins, and one expert says it's a trap designed to give them more control over your money. Is it time to load up on alts, or is there a hidden risk everyone is missing? In the latest video from Altcoin Daily, guest Mark Moss, a longtime tech entrepreneur and Bitcoin investor, explains why he believes Bitcoin is the solution to a failing debt-based monetary system. He recounts his personal story of losing significantly in the 2008 real estate crash, which led him to understand macroeconomics and identify the problem of endless currency debasement by governments. Moss argues that Bitcoin's fixed supply of 21 million makes it a superior store of value that protects against this inflation. He projects that as global liquidity increases, the total store of value basket of assets will grow from about $1 quadrillion today to $1.60 quadrillion by 2030. Due to its scarcity and sensitivity to liquidity, he calculates that Bitcoin could reach $1 million per coin by 2030, which would be about a 10x gain in the next 5 years. Moss also discusses the rise of Bitcoin treasury companies like MicroStrategy and Metaplanet, which use public markets to acquire large amounts of Bitcoin. He sees this as a durable, long-term business model and believes we're just at the beginning of this trend, dismissing fears of a bubble in these specific stocks. He suggests the current market cycle top for Bitcoin could land between $140,000 and $220,000, likely in late 2025 or early 2026, and that MicroStrategy could potentially 3x in that same time frame. Mark Moss lays out a compelling case for Bitcoin's long-term value, tying its potential rise to the expansion of global liquidity. His prediction of a 10x increase over 5 years is ambitious and hinges on the continuation of significant monetary debasement. Currently, Bitcoin is trading around the $113,000 to $116,000 range, a fair distance from the cycle top he suggests for late this year. The U.S. Federal Reserve has held its benchmark interest rate steady at 4.25%, 4.50% for several consecutive meetings, resisting pressure to cut rates, though recent signals from Fed Chair Jerome Powell suggest cuts may be considered soon. This monetary tightening could act as a headwind to the rapid liquidity expansion Moss's thesis relies on. In the latest video from Crypto Rover, the discussion centers on the current state of the crypto market following Jerome Powell's Jackson Hole speech. Historically, this event causes a pump, then a dump, creating a lower low before a rally, and a similar pattern seems to be unfolding. Bitcoin is showing signs of weakness and could be headed for another correction, with a significant amount of liquidity resting around the $110,000 level. The speaker mentions having buy orders set between $109,000 to $111,000 to catch this potential dip. In contrast, Ethereum appears very strong and is outperforming Bitcoin. The analysis suggests we are in the beginning stages of an altcoin season, transitioning from phase 2 into phases 3 and 4, where smaller altcoins are expected to perform incredibly well. This is supported by the Bitcoin dominance chart, which shows a rejection that could signal money flowing into altcoins. The video points out that while Bitcoin might consolidate and be boring for a while, potentially topping out around $130,000, this is the exact environment where altcoins shine. For Ethereum, the speaker is holding a large trade with a take-profit target of $6,500. A final interesting point is that Ethereum's gas fees are at all-time lows while its price is at all-time highs, indicating the network's development is paying off and removing a barrier for a continued move up. The video's thesis that we could be on the verge of an altcoin season while Bitcoin consolidates aligns with some current market signals. As of late August 2025, Bitcoin is trading around $113,000 to $115,000, showing some indecision after a strong run. At the same time, Ethereum has been showing relative strength, recently pushing towards the $4,800 to $4,900 level. This divergence is a classic prerequisite for capital to rotate from the market leader into higher beta altcoins. The speaker's focus on the Bitcoin dominance chart is particularly relevant. Data from mid-August shows Bitcoin dominance fell from around 65% in July to under 60% as Ethereum gained market share. This trend, if it continues, would support the altcoin season narrative. In the latest video from the Crypto Tips channel, the host explains why recent market moves could be the start of a new altcoin season. He points to a massive $250 million short squeeze on Ethereum that caused it to outperform Bitcoin, a classic sign that altcoins are ready to run. The video argues that the bigger picture for Bitcoin is incredibly bullish due to fundamental economic problems. The U.S. national debt is exploding, having grown from $4.9 trillion in 1995 to over $37 trillion today, and this trend is expected to continue, driving more people to Bitcoin as a store of value. The speaker also tackles the issue of tariffs, stating they are highly inflationary despite what politicians claim. He uses rising CPI data and a record U.S. trade deficit as proof that government policies are devaluing currency, making Bitcoin's finite supply of 21 million even more attractive. He warns viewers about a massive tech bubble and stresses the importance of taking profits. The video also touches on Eric Trump's prediction of a $175,000 Bitcoin, but quickly dismisses him as not being a true Bitcoin maxi, advising viewers to ignore politicians. Instead, he suggests listening to established voices in the crypto space like Andreas Antonopoulos and Eric Voorhees, who are focused on building and paving the way for financial freedom. The video's core arguments about macroeconomic pressures benefiting Bitcoin are timely. The U.S. national debt has indeed climbed to over $37.2 trillion as of late August 2025, a staggering figure that lends weight to the search for alternative stores of value. Currently, Bitcoin is trading around $113,000 to $115,000, while Ethereum is hovering near $4,700 to $4,800. The speaker's point about tariffs being inflationary is also a key topic. The latest CPI data for July 2025 showed a 2.7% increase over the last 12 months, with core inflation at 3.1%. While these numbers are slightly down from previous peaks, they remain well above the Federal Reserve's target, keeping inflation concerns front and center for investors. The video's observation about an altcoin season starting when Ethereum lags Bitcoin is a classic crypto market dynamic. In the last 24 hours, Ethereum has seen a modest gain while Bitcoin has seen a slight dip, which could be interpreted in various ways. The overall market sentiment is currently neutral, suggesting that while the macro case for crypto is strong, the market isn't overly euphoric, a condition the speaker believes is ideal for the start of an altcoin run. In a latest video from Lark Davis, he discusses a different way to figure out what Ethereum is worth, moving beyond pure speculation. He brings up a concept used by SharpLink Gaming, a company that holds a lot of ETH in its treasury, similar to what MicroStrategy does with Bitcoin. SharpLink uses a metric called Total Value Secured, TVS, to gauge Ethereum's value. Unlike the more common Total Value Locked TVL, which only counts assets in DeFi protocols, TVS takes a broader view. It includes everything that relies on Ethereum's security, like staked ETH, assets on Layer 2s, stablecoins, and real-world assets, RWAs. The idea of using Total Value Secured, TVS, to value Ethereum is compelling, especially as the narrative shifts towards the tokenization of real-world assets. The current price of Ethereum is hovering around $4,819.40. The video's point about a 1:1 correlation between TVS and market cap is interesting, but the market is clearly applying a premium, likely due to speculation on future growth. The real story here is the expansion of assets on the blockchain. Projections for the RWA tokenization market are substantial, with some estimates reaching as high as $30 trillion by 2030. Similarly, the stablecoin market is also expected to see huge growth, with some predicting it could reach $1.2 trillion by 2028. If Ethereum maintains its dominance in these sectors, its TVS will naturally climb. Companies like SharpLink Gaming are betting big on this, with their treasury now holding over 740,000 ETH. This corporate adoption adds another layer of confidence. While the $8,000 floor price prediction is based on future projections, The underlying trend of increasing on-chain value provides a solid foundation for Ethereum's long-term valuation. In the latest video from Coin Bureau, Guy breaks down the process of finding, buying, and securing altcoins for those new to crypto. The guide starts by explaining the difference between investing and trading, recommending a long-term investor mindset. It stresses the importance of diversification across different crypto sectors to manage risk. The video walks viewers through using coin tracking websites like CoinGecko to find potential projects, suggesting they filter by categories and consider market cap, price, and exchange accessibility. The next step involves surface-level analysis, checking a crypto's trading volume, circulating supply, social media activity, and the number of holders to gauge its viability. For a more thorough investigation, the video advises watching interviews with founders and reading through project documentation and blogs to understand the project's purpose and technology. Finally, it provides a step-by-step guide on how to purchase altcoins on a centralized exchange, from setting up an account and completing KYC to making the trade. The video concludes with a crucial step, moving the purchased crypto off the exchange and into a personal hot or cold wallet for better security, explaining how to find the right wallet and safely transfer the assets. The video offers a timeless and solid framework for beginners, which is especially relevant in the current market. As of late August 2025, the crypto space is showing signs of a capital rotation from Bitcoin to altcoins, with some analysts suggesting the early phases of an alt season. Bitcoin's price has been hovering around the $113,000 to $116,000 range, while Ethereum has shown strong performance, which historically pulls momentum into the broader altcoin market. This market dynamic is happening alongside significant progress in U.S. crypto regulation. The passing of legislation like the Genius and Clarity Acts in July and August 2025 is establishing clearer rules for stablecoins and crypto custody for banks. This regulatory movement is boosting institutional confidence, with a noticeable increase in firms entering the digital asset space and launching new products. For someone following the video's advice, this means the accessibility check is more important than ever. Projects listed on reputable U.S.-compliant exchanges are better positioned in this evolving landscape. The current environment, characterized by growing regulatory clarity and shifting market sentiment toward altcoins, makes the video's methodical research process, especially understanding a project's fundamentals and its tokenomics, a critical exercise to navigate the opportunities and risks. In the latest video from Crypto's Risks, the host celebrates the market's reaction to Jerome Powell's recent speech at Jackson Hole. He notes that Powell's dovish turn has increased the likelihood of rate cuts, which has, in turn, fueled a market rally. Ethereum is highlighted for breaking its all-time high, nearing $4,800, while Solana also saw a significant jump to almost $210. The host confidently declares that altcoin season is definitely on, pointing to Bitcoin's dominance dropping to 58%. He advises viewers on portfolio strategy, suggesting that those heavily invested in Bitcoin might consider diversifying into large-cap altcoins like ETH, SOL, XRP, and BNB. For those starting with new capital, he recommends his 50-25/25 rule: 50% in Bitcoin, 25% in large-cap altcoins, top 15 to 20, excluding stablecoins and Tron, and the final 25% in a mix of memes like Bonk and WIF, and infrastructure plays on L1s and L2s, such as Uniswap and Lido. The video's enthusiastic declaration of an altcoin season captures the greed sentiment that swept the market following Jerome Powell's remarks at Jackson Hole. The immediate 5% surge in Bitcoin to over $117,000 and Ethereum's climb to a new all-time high above $4,800 lent strong credence to this optimistic outlook. Powell's signal of potential rate cuts has historically been a powerful catalyst for risk assets, and the market's reaction suggests this time is no different. Bitcoin is currently trading around $115,000, showing some consolidation after the spike, while Ethereum hovers near $4,776. Solana is also holding its gains, trading around the $209 mark. In the latest video from the Crypto Banter channel, host David presents a detailed altcoin trading strategy that he claims has been very profitable. The system relies on a combination of several custom indicators working together. The core of the strategy is the McKinley Dynamic Indicator, which sets the baseline trend direction. For entry confirmations, the strategy uses two additional indicators, the Larry Williams proxy indicator LWPI and the TDFI. To avoid getting caught in stagnant sideways markets, a volatility indicator called the ADXMA is used to ensure there's enough market movement. Finally, the stop loss is determined using ATR bands, which adjust to current market conditions rather than a fixed percentage. The presented strategy is a classic example of a multi-conditional, indicator-based system designed for algorithmic or bot trading. Its strength lies in layering confirmations to filter out bad trades, which is a sound approach. However, the effectiveness of such systems is highly dependent on the prevailing market conditions. The back-tested results look impressive, but markets are constantly evolving. In the latest video from The Modern Investor, the host tackles two big topics currently stirring up the financial world. First, he discusses the rising optimism about the U.S. economy, pointing to a Morgan Stanley strategist who claims we're in a new bull market. The speaker is a bit wary of this view, mentioning that high inflation and employment issues are still a reality for many. The main focus, however, is a strong critique of the corporate push for stablecoins. He argues that companies are creating their own stablecoins not to make life easier for consumers, but to get around paying fees to Visa and MasterCard. He warns this will lead to a messy system where every major company, from Amazon to your local supermarket, has its own coin that doesn't work with others. He points to the joint venture between Standard Chartered and Animoca brands in Hong Kong as an example of this trend. The speaker expresses serious concern that this is just a friendlier-sounding version of central bank digital currencies, CBDCs, which could give corporations immense control. He recalls how companies have used fine print in the past to legally take customer funds during a crisis, and predicts a similar future where a major company with a stablecoin will drain user accounts to cover its own needs. The video's skepticism towards corporate-led stablecoins is particularly relevant right now. While the host is reacting to a general trend, we're seeing it play out in real time. Hong Kong is actively developing a regulatory sandbox for stablecoin issuers, with Standard Chartered and Animoca brands being key participants. In the U.S., the recently signed Genius Act is creating a formal regulatory framework for stablecoins, which is encouraging major players to explore this space. This regulatory clarity is happening as the broader crypto market shows signs of volatility. After reaching a new all-time high of over $124,000, Bitcoin has seen a correction and is now trading around the $115,000 mark. Ethereum is trading near $4,800. The speaker's point about a fragmented system is a valid concern. If every corporation issues its own token, it could create significant friction for consumers, undermining the goal of seamless digital transactions. The debate contrasts sharply with the optimistic new bull market thesis from Morgan Stanley mentioned in the video, especially since Morgan Stanley's own forecasts have revised U.S. GDP growth for 2025 downwards. This creates a conflicting picture where traditional equity strategists see a bull run, while the path for digital assets is being paved with corporate and regulatory interests that might not align with the original decentralized vision of crypto.